Hello, this is Coach Mike with WinningsTockCoach.com. Going to start out with our market overview video here on the SPX chart. That's our S&P 500 chart. Had a really good week since our bottom call. If you've been watching my weekly market overview videos over the past 3-4 weeks now, we had been calling for a bottom around 1908.47. We hit pretty darn close to it. A nice move up for our longer term target of 27.03. Not gonna say that I think we'll hit that this week. Could we? Of course we could, but I really think that if we're going to edge that out, it'll take a little while to get there. A few just technical concerns, and these aren't big concerns at all, with the lower low and lower high that were made on Friday from Thursday's trading day. This would be an indication set up of a charting pattern called an evening star if we got continuation downwards on Monday. Now, one thing I always tell traders to do is try to nullify the bearish or bullish arguments to help you with your trades. Now, when you play an evening star pattern, your stop on a short, because that would be the play on the evening star pattern, is going to be the high from the star candle, or that second candle in the 3-candle pattern. So quite simply, just like we had down here, and those of you with the coaches roster, you'll remember me talking about it down here. I said, if we got continuation, it could be an evening star, but if we broke the high of the star candle, game on, let's keep rolling. And you saw some more buy alerts there. We made more buys on Honeywell, Pandora, things that ran well over 100% for us. JP Morgan was that day. Citigroup was that day. So, those alerts that we had that you saw that came off of this, Lockheed Martin as well. So, looking at this overall, one thing I want to say is, I don't necessarily think that it'll pull back much, if it did pull back right now, unless there was some geopolitical data that really just hurt the market. But I also wanted to say that I think it could be a little slow. We saw in the past, we make this big run up and then it starts to kind of trickle off. You get into a little bit of consolidation. We saw it there. We saw it over in here in April. We saw it over here in July. You get through that consolidation, and even though you're kind of edging up, it's not really those swift moves in either direction like we've seen over the past 2 weeks. Those of you at the coaches roster, you'll recall me telling every one of you, for my swing trades, my sweet spot is really that 3-week mark, because those are the times where, every 3 months or so we get a pullback in the markets, and we get about 3 weeks of topside movement before we get into those consolidation periods, which quite frankly can be a pain in the rear end unless you have good investment strategies and trading strategies. There is a little bit of a difference in the two. When we caught that bottom bounce, we talked about not just diversifying the stocks you're trading, but diversifying how you're trading them. A variation of some shorter term stuff and some longer term stuff, so that the longer term stuff could serve to sustain you once we get into another consolidation pattern. And it does happen. It happens nearly every time. You can see just over the last year on the daily chart here on the SPX, we get into the highs, we kind of start consolidating. We'll get pops and whatnot off of it in either direction, up or down. But at each one of these lows, thus far, over the past, almost 6 years now, every market pullback that we get every few months is quite literally your best longer-term buying opportunity. So, will that eventually end? Of course it'll eventually end. But if you've been right on it every time since the market's bottomed in March of 2009, then it's going to be okay to be wrong once when the day finally gets here that we don't call the bottom. That's why we bought and went long when our SPX got down into this 1908.47. Now, as far as a low side target, quite literally right now, I think that if we did start to pull back shy of a retracement that gives up more than half of this run-up we've had, I think we enter another type pattern like we've seen here, where if we get some downwards movement, it's just probably going to be a couple 3 days, but then it's going to be followed with a couple 3 days of up movement, back and forth, where the end result is like taking 3 steps forward and 2 steps back. That's okay for longer term investment strategies. It hurts for some swing trading, and it's okay for day trading. So don't be scared of it. Understand where we're at. So far, every major market pullback has just been a buying opportunity since March of 2009. And we'll keep with the flow of that. You see it once again, we were right on the last one. I think that we get a slow trickling movement upwards to 2027.03. But for your shorter term trades, we're going to go over to our weekly chart. We're going to go and look at our swing high point that we just broke out of, barely. That swing high point of 1985.44 on the SPX. We closed just 3 points above it, basically. For your short-term trades that you don't really have the tolerance, or maybe you're trading in options and don't have the time for downwards movement, if we close a day below that 1985.44, that would probably be where I'd stop on the short-term trades. You know, if you caught it on the last bottom, that's where you just look at it and say, cool, well, we made a lot of money. Let's go ahead and start reducing the risk on our shorter term trades, but our longer term trades, no risk of them right here. If we did get under that 1985.44, we could look at using that as a support point, maybe take some shorts or even some leveraging for our longer term stuff, but quite honestly, I'm not worried about that whatsoever right now. I think we get a kind of a slow and trickling articulation up to that 2027.03. Moving over here to our DJI chart, this is our Dow Jones Industrial Average. You remember last week I had a dead cat bounce marked on here with this red candle, and quite simply we said that all we needed to do was close a day over the 50% line, which I'm going to put back up here so you can see it, which would give us strength in the upwards direction. Or if we continued red from that prior Friday's close, we would actually have a good setup for a short play. Well, we opened up green from the Friday's close. We never stopped. We broke over the 50% line, and thus, what do you see? A nice run up. Now, that being said, let me take these out of here, and you're going to see that unlike the S&P 500, the DJI did not make a new high. Not to say it can't, it just hasn't yet. So our prior high, that 17,151.56, is going to be serving as a bit of a resistance. I do still have that target area I've been watching for a while, 17,209.51. I think that would be a decent little area for it to kind of slow down a little bit. But overall, much like we saw, and you'll see when we get to a couple of these other charts, when we talked about momentum trades and breaking those tops, we saw it with the COMP, and that's the one I'll discuss it again on in this video. Those momentum trades can be created once we break that top. So we'll watch our prior high close more so than that overall high, because if we can close above 17,138.20, that's where I believe we could see some momentum and get, you know, momentum trades. You can't ever put a time on them. Sometimes they can be a long time, sometimes they can be a short time, but the one thing they are consistent with is that they clearly tell you when the momentum has ended, and that will do so by volume. So if you're watching for that breakout in the DJI, should it happen, otherwise it's too close to resistance to be buying right now. You know, a couple assumptions traders have to make is that resistance could possibly hold, and support could possibly hold. So identifying where they are could mean that if you get up there and pull back from it, that might be your sell indication. So we don't want to be buying that close to where we could possibly have to sell. But on the momentum breakout, you know, positions that we got down in here, we can hold and give it a chance to see if it makes the breakout. If it maybe gets up to that resistance area and pulls back, we can gladly do that. Otherwise, we need to wait for the momentum breakout to either add positions or add two positions or make new positions on the momentum trades. And that's kind of where I am with the DJI. You know, right now with the strong move off of the bottom area, we had this trend line in our video a couple weeks ago. It was the trend line we used to kind of predict the bottom. It bounced just above it, so it didn't quite get down as low as I thought. But when you're talking about what's now a $17,000 index, it's okay to be 5-10 points off. It's such a minuscule percentage. So we were pretty close on that one. And overall, we're getting into a resistance point that we've got to break until we see some momentum. If we do get this break, for those of you with the coaches roster, this will be where I'd look for trade we have in Goldman Sachs to kind of complete to the target area. But we're going to want to watch in case it pulls back from this point, because that could have an effect on us as well. And that's where kind of at with the DJI, it's kind of in untradeable territory right now. In all honesty, it's close enough to the top where while it still could go up, I mean, heck, I'm saying it could go up another 150 points. Until it makes that move up, you're buying into resistance. So we need to wait for either a confirmed pullback or a momentum trade on the break of the resistance point for the DJI. Moving over to the RUT, our Russell 2000, the small cap index. Quite honestly, I think the Russell 2000 had a horrible week. It came out pretty strong on Monday when we were looking for, quite simply, last week's video. If it went green, we could go long. If it went continued red, we would go short. It kept moving. Small cap positions you were in stayed safe. You're good. But after Monday's move, it went sideways all week when the rest of the indices really had some decent movement. Quite frankly, if small caps don't take off early in the week, it could be a time where it just gets kind of boring for small caps. And I'm hoping not to see that, but it is something we have to identify. Last week's market overview video, we talked about the COMP, how it had closed with this red hanging man candle, as it's called, a hammer candle at the top of the run, that had really triple topped into a resistance area. Quite frankly, it was on the breakout of that line, momentum trades in NASDAQ stocks. Well, let's see what we saw. We saw a lot of technology names really moving last week. Some continuation on Apple, several others. Netflix did real good. LinkedIn just keeps on moving. And some really haven't moved too much, but you see as we got later in the week, we didn't continue a lot of that heavy momentum. We kind of consolidated Wednesday and Thursday with just a little bit of a pop-up on Friday. Could that be an indication of the momentum weakening? Yes, it could, but the volume actually remained halfway decent, not as great as I would have liked, but not enough to be concerning for a momentum trade. So, you know, if you got in those momentum trades based on last week's market overview video, as far as what the indice chart's showing right now, then you're still okay. Keep an eye on that volume, though, because usually you like a momentum trade to continue on with some power. We got just a couple days in it. It's been a couple days going sideways. And Friday wasn't convincing on the move up. Now that could have just been because it was Friday and some profit takers were there, but we'll have to see on Monday if we get continuation in the COMP. This is Coach Mike from WinningStockCoach.com, wishing you the best of luck in your trading in the upcoming week, and God bless all of you.